So we have interesting article here talking about business dynamics for startups in the agri-food tech industry. So four big barriers to commercialization, how agri-food tech startups can conquer them. It's a sponsored article, but nonetheless from CSC Leasing, just really on target. And this is really any startup in the industry should make sure that they've read this article or at least gone through this with their advisors, because all of it makes absolute sense and it's all crystal clear. So let's just jump right into it and add some comments later. After planning, designing, testing, and prototyping, the ultimate goal for an ag tech and a food tech startup is the commercialization. That is, getting products into market and finally seeing a financial gain on all the hard work. The challenge for many startups is the process and cost of bringing a new product to market. Even the most innovative and exciting solutions that solve important real-world problems can fail if the bring-to-market strategy is underfunded or ill-planned. So, blockers to commercialization success. Most new ag tech and food tech businesses will face at least one of the following obstacles when getting a product to market. Many organizations will face more than one. Number one, failing to understand the target audience. Startups should, by this point, have conducted significant discovery to understand their ideal customers' needs and demands. They should be able to clearly state how the product will solve customers' problems and that others are willing to pay for. However, the agri-food tech market is constantly changing, especially with the emerging technologies. It is essential that startups commit to ongoing market research that includes competitive research and communicating with early adopters to ensure the continued value of products for customers. For example, precision agricultural tools will appeal more to farmers and ag dealers if they are easy to integrate into existing farm operations and simple to learn. So to repeat that, precision agricultural tools will appeal more to farmers and agricultural dealers if they're easy to integrate into existing farm operations and simpler. Number two, lack of marketing. So without investing in activities such as digital marketing campaigns, advertising, and public relations, startups can't hope to adequately educate others about their products. It is crucial to build this kind of awareness and generate excitement around a product or a service. Startups that fail to do this struggle to engage enough customers and close enough deals to scale the business. That was point number two. Now, point number three. Insufficient in-house talent. Ag tech and food tech businesses must hire a range of experts, from scientists and researchers to mechanical and software engineers, and that's only for product development. Once the initial product is ready for commercialization, a whole other host of individuals will need to be on board, including marketing, sales, and customer service experts, not to mention enough skilled workers for a production line. Without this talent in place, the company won't be able to grow at a reasonable pace. Businesses must invest in continuous recruiting, hiring, and training to ensure that they have the foundation in place to scale. Number four, inability to keep up with demand. In a perfect world, demand for a product skyrockets. In reality, it only does so if startups can keep pace with that demand. Failure to meet this demand could anger customers and hurt the business before it ever truly takes off. Meeting supply requirements will often require building out a manufacturing facility or a bigger lab, which requires costly equipment and people to run it all. It's vital to have a plan and the finances on hand to take this next step as the market demands. The biggest challenge of all, investment allocation. All those blockers have one thing in common: they require lots of money. When ag tech and food tech businesses are trying to launch, they only have so much capital to work with, and a significant chunk of it goes to equipment and technology. That means there's often isn't enough left over for other vital investments, such as ongoing discovery, marketing, hiring, and training. With those investments, growth is often limited. Startups must take an honest look at how they are allocating the equipment they have raised and make changes to ensure they are giving their product the best opportunity to reach commercialization. That means finding alternative sources to fund expensive facility builds so they can have the cash on hand to focus on higher ROI initiatives. This challenge is especially important now as global agri-foodtech investment has dropped significantly compared to previous years, and capital is tough to come by for many startups. Investors in 2024 want to ensure solid returns, so startups must be honest as possible about their capital allocation. So finishing the article is that CSC Leasing is offering funding that grows with a business, supporting growing, well-run agtech and foodtech businesses with low-cost funding for equipment and tech purchases. So they have equipment financing, and then it says reach out to Jordan Stowe. Okay, so our commentary on this article is absolutely just completely on point. Every single one of the first initial 4 points, and of course the fifth and final point at the end of the article. So number one, failing to understand the target audience. I think for a lot of co-founders, most co-founders come from the tech side or they come from the engineering side, and therefore by default they don't really come from the sales and marketing and business development side. And then I don't know if people in Silicon Valley or VCs in general will call this sort of the founder virus, or they'll call it the founder delusion, but most founders believe that everything is wrong with the market. The market just doesn't get it yet. They in their head have created sort of the wonderful product or service, and it's just other people that are not smart enough to understand. But the target audience is sort of talking about market research, or for example, if you're trying to build a new industry or introduce a new product to a part of the world where it doesn't exist, this product or service, you can have market research reports, and there's a lot of those companies online that have these forecasted projections for market research. But then specifically, if you already have some sort of client number one or customer number one, then you can build out from there a target audience. And then if the startup is now starting to pivot or iterate, they need to begin to be aware that their scope is shifting. And so their target audience, therefore, is also shifting. So it's a good point from this article, understanding target audience. It seems for people that come from the sales and fundraising and business development and marketing side that, yeah, of course you need to understand your target audience. There's a dynamic between the frontline sales staff in most companies will come back to the office and report directly to marketing, or more frequently marketing plus IT, and tell them what they just got the feedback from their clients. And then the higher the tech environment, the more the sales folks need to go right to the tech team and tell them, well, the client has questioned this about the homepage or the checkout or whatever it may be, or why is it not as simple as 1, 2, 3, 4 versus just 1, 2 clicks? Okay, so second step for this article would be, of course, lack of marketing. This is, again, more on the budget side where, yes, you can have a few clients, but if you're looking to scale, you do have to do some sort of outbound campaigns, advertising, public relations. So, of course, building awareness, generating excitement for your product or service. And it's very clear in general that even outside of the agri-food-tech industry, closing enough deals to scale a business comes from marketing. Which type of marketing, of course, is up to the startup. Some of it is in-house, and of course, a lot of it is through partnerships or whatever it may be. Depends on your startup. Number 3 in the article, it says insufficient in-house talent, and this is simply saying HR. So yeah, you might have a few co-founders. Yeah, you might have a CIO or a CTO and a COO and a CEO. But once you start building out from there, senior engineers. We can get into corporate governance about the board of directors or whatever, but that's not for this discussion. HR is just any additional staff that's to be added, which of course here it says marketing, sales, customer service, and then production line, commercialization. So yeah, talent in place. This article is stressing that the cash needs to be on hand if you're starting to grow out from your core founding team, from your C-level outward. Most likely, more often than not, it's dealing with admin and finance, but certainly sales and marketing and BD seem to be most startups' 5th hire, 6th hire, 7th hire, when the co-founders just get too busy to focus on sales and fundraising themselves. And 4 of 5, the fourth bullet point of the 5 in this article is inability to keep up with demand. So this really just means that there's a bottleneck. So yeah, the article says in a perfect world, demand for product skyrockets. In reality, it only does so if startups can keep pace with demand. So what we're trying to see here from this fourth bullet point is that, let's say that you have a startup or you have a product or service, but you don't have either the HR if it's a service, or for the product, you just don't have the factory, or you don't have the laboratory, you don't have the supply chain. Then you have the problem of actually there is demand, but you can't keep up the supply. And then now you've overpromised and underdelivered, and that can leave a very bad taste in the mouth of your customers or clients, because you've uh, raised their expectations and you've oversold, and you don't have the ability to follow through. And then investors, or excuse me, for clients could be very picky like that, and they might not allow you a second bite at the apple. And the article, of course, finishes up with the biggest challenge of all, which is sort of a blanket statement, which is investment allocation. So the requirement for money, so it says agtech, foodtech, all when launching need the capital to work with. So some might go to equipment, some might go to tech, but other investments, discovery, marketing, hiring, training, and the capital is limited. So yeah, the article ties these pieces together about commercialization. And then alternate sources of funding. When you're a startup, there's dozens of types of funding mechanisms. Some are, I think, much more predatory than others if you're not dealing with friends and family. But that's up to the co-founders to determine. So yeah, it also mentions here the investor cycle, saying that yeah, just a few years ago, 2020 and 2021, there was a huge uptick in investors in the industry. And there's been a lot of macro and annual reports that report this, but certainly 2023 was a very down year. In 2024, we don't quite have the numbers yet for the agri-food tech industry as a whole, but the sentiment that I've been hearing just on this quick point is that people that were trying to get into it during the last wave and having a lot of extra cash on hand, or dry powder, if you will, they've either been burnt, or as they rotate their funds, they've been underperforming, or they just didn't have the core competency, and so they receded away and moved away from the industry. So until the next true bull run happens for funding, if you are already an agritech or agri-food tech startup, and you do not have, and right now in this 2023 and 2024 a sort of winter for funding, then you are going to have less average investors, or less average financiers, or fellow shareholders to assist you if you want to scale. So that puts the startup in a tough place because they have less leverage. So of course CSC Leasing says that they can solve that problem. That is up to them to see how they can negotiate that. So I agree with most of this article, almost 100% of it. It's a pretty much generic and anonymized to the point where, yeah, regardless of where you are in the industry, you need to understand your audience for sure. Market research as you pivot. Marketing is really key to connect sales, marketing, and just doing campaigns. In-house talent, HR as you scale. And then demand just means bottlenecks. If you can't scale as sales increase, then you're really doing everybody a disservice. And all four of the above require funding. So it was a really interesting article, and I think it talks quite well about startups in general, but certainly for agri-food tech, how to be aware of these barriers, how to be aware of these four big, frequently seen and experienced problems for startups, and how to anticipate and then, of course, mitigate or avoid them. So very much enjoyed this article. It was a good read and good to opine on.